Hello everybody, welcome to TraderMerlin Show for your Wednesday edition. It is May the 4th, as you guys may have seen on the graphic. May the 4th be with you, something I had a little bit of fun with on today's graphics. And of course, the background music should actually be something more like this. Yes, the Imperial Fed forces are back creating havoc in our financial markets. So we'll talk about that today. And some fun things to go with this market for sure, especially with regards to the way these markets moved and especially with what we talked about on yesterday's show. So let's kick things off. I'm going to do a little bit of a different tact here. I'll start with a little bit of a market update so we can see what on earth was really happening out there. With regards to the Fed announcement, there was really no surprise with the number that was released. But I have a question for everybody out there. You type in a chat. What was it that caused this market to go nuts to the upside today? Many of you yesterday go, no, there's no way, not going to move up 3%, probably not going to do it. Well, yesterday I said, could it go up or down 3% in 60 seconds? Of course, it did not do that today. It was one of the quietest Fed announcements I've seen, barely moved at all. And then something happened, and markets went absolutely gangbuster to the upside. I'm curious if anybody knows exactly what triggered it. I do. And it's funny because I can tell you the question, the person, and the action that came out. So I'll just see what you guys think with regards to what caused this huge market rally here today. Give us some time to settle in. It's not just that there was no 75, right? It was the question that was asked, and everything was fine. So let me show you the price chart here, the S&P 500. We'll go back and put this on let's do it on a 1 minute, right? We'll go all the way back to the actual announcement itself. And you can see right here where the announcement came out. And I'll put a vertical line. Let's do a yellow box. Why don't we haven't done a yellow box in a while, so let's throw a little yellow box on there. Right here is 11 o'clock. That is when that announcement came out. And you can see there was some whipsaws, but these are really no big deal. Like, big deal, who cares, right? Then it started to whip a little bit more. And remember, something happened at 12:30. At 12:30, the press conference starts where Jerome Powell goes out there and starts to field questions from reporters. So this went on for a few minutes, and I watched the whole thing and listened to every comment of it. But as you notice here, this yellow box is simply when the Fed made their announcement that they're going to raise 50 basis points. And that's it. That's all they have to say. We're raising 50 basis points. Done. The market had a little bit of chop, but nothing overly dramatic. And then you move forward to the actual press conference. And there's a gentleman who some of you might know. His name is Steve Leisman from CNBC. Always asks very good questions, by the way. I'm not a CNBC fan, but think Steve Leisman does a great job. And Steve Leisman's, basically asked a whole bunch of different questions, as they always do. Every reporter tries to get like 4 questions in one. And one of Steve Leisman's questions were, how are you qualifying these rate increases? Is it 50, 25? Is it going to be 0? Is it 75? Do we see 75 basis point rate increases in the future? That's what started it. And it actually started to dip a little bit in that 60 seconds that he was kind of hemming and hawing. And then Jerome Powell goes, 75 basis points is not even on the table. And from that second, markets started going gangbusters. And he said, for the next 2 meetings, this is Jerome Powell said, for the next 2 meetings, where 50 basis points is on the table. However, 75, we're not even thinking about that. Now, of course, that's the Fed, I think, downplaying some things to calm a little bit. But I think the markets, as we saw from the charts yesterday, have priced in a 75 basis point increase at the next meeting. So what has changed? Check this chart out. Let's go back to our FOMC target rates. And here you can see for the June 15th meeting, there's been a significant change. Remember yesterday, there was a 95% chance that they were going to see a 75 basis point increase. That's significant, right? Now, all of a sudden, it's dropped by 50 basis points. So they're expecting, right now, they're actually expecting it 21% to stay the same right where we're at, and a 78% chance we're going to get 25 basis point increase. So kind of crazy to see that big of a drop in just 24 hours. I think what you'll see between now and the next meeting, mark my words, is these numbers right here. Let me zoom in. I know it's hard for some people to read because you're on your mobile devices. Here, this table should be a little bit clearer. 75 to 100 is where we're at right now. And nobody would have predicted we're going to stay there last month or last week or yesterday. Now it's a 21% chance we'll stay there. But really, what's noteworthy is the expectations have fallen from 75 basis points, which was a 95% probability, to now 78. So what this means is the instead of taking your foot off of the gas, it's staying on the gas for a little while, just lifting a little bit less. So this is part of the reason why you saw the markets rally. They had already priced in 50 basis point increase on this announcement, and they priced in 75 of the next one. So if at the next one, Chairman Powell has already said, nope, 50 is probably as high as we're going to go, maybe even 25, the markets went, hallelujah, and just ripped to the upside today. And it was a gorgeous rally. I actually had these lines on here that we talked about yesterday. Now, my play did not happen. I know for hopefully some of you guys caught this, but if we look at where we were yesterday, we were right, get rid of that candle right there. And I did have orders out, just so everybody knows. I did have a buy order at 40.50, and I had a sell order at 4,300, just a hair below 4,300. Those orders were sitting out there this morning as soon as I got in, put them in the system, and just waited for whatever happened to happen. Now, the reason I canceled those orders before it rallied up there, I was waiting for the announcement to happen. I was at 11 o'clock Pacific time. I was waiting for the announcement. As an announcement happened, I was expecting a 3% move in just a couple of minutes. I was expecting markets to go haywire. They did not. They actually just kind of went flat, didn't do anything. And then after the announcement, as you can see, let's go intraday. Let's do a 5-minute. You can see there's the announcement, and then, boy, it rallied all the way up, kissed that 4,300 mark, and now we're drifting down. So, I mentioned, how do I trade this? I'm looking for those extremes. I'm going for way outside the picture. My guess is that this will probably hold, and you'll see the markets drift down a little bit, because what did it ultimately tell us about the current status of the market? It ultimately told us that inflation is not fixed, that employment is historically low, that we have fairly poor labor participation rate, and that the Fed is trying to regulate inflation. Now, of course, the interest rate piece is one of those factors they're going to use to help regulate the inflation rate, but it doesn't seem to be as dire to the Fed's perspective. I think the market rejoiced in that. Yes, so I was actually hoping, Chris, that it would have rallied aggressively in just 5 or 10 minutes to that high and then sold off. Because I also mentioned this yesterday. I said what you should do is stay out of the Fed announcements. Stay away from that, 15, 20 minutes of time, and let the market choose a direction. And as you can see on this price chart, what happened? Well, we got whipsaw, 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 and then the market took direction and had a huge move. This is very typical of a Fed announcement day. Now, I don't know which way this thing was going to go based off of the comments by Jerome Powell at the conference after, the press conference after. You kind of expected the market to continue on rallying, but I was in a classroom doing some teaching, so I didn't capitalize on this rally, unfortunately. But I had my orders in here, and had this happened, let's just say within this yellow box, so I'm going to move my yellow box here. If that happened to hit either one of these levels, either that one there or that one there, this is call it my extremes window. If something hit those levels in that window, I was fine with it. And ultimately, we ended up over 3% on the day, which is pretty crazy. Oh, yes, it was the, you got to look at the 3 richest people in the world. Shoulda, coulda, and woulda. You didn't buy it, not to sound like a jerk, but you didn't buy it, so don't worry about it. Don't even think about it. You didn't do it, move on to the next trade. It is what it is. So I guess, what does this mean for our markets going forward? If the Fed is kind of backpedaling on their aggression a little bit and saying, no 75s, we're going to do 50 for the next 2 meetings. That's kind of what he said. He said 50 is on the table for the next 2 meetings. Of course, we all know that's going to be data dependent, which means we'll have to wait and see what that data shows us and if inflation starts to slow down. What I found noteworthy about the press conference afterwards was Jerome Powell says, we don't expect to fix inflation right away. He says, we're just hoping to level it off, which is right away that tells you there's a bigger problem here, because they're just hoping they can flatten it as opposed to this meteoric rise that we have right now. All right, real quick, I want to go through, make sure I don't start losing on questions. Well, it seems to ask about, yep, there you go, Chase, nailed it. That's exactly what it was. Why didn't you tweet it out? Michael, I'm just too damn busy. I'm not a big social media person, which is why I probably don't have enough followers, but yeah, I Could have tweeted out, but the market pretending like the Fed matters in real life and business. Well, one of the things that there was a question, I think she was from the Financial Times. She was asking, how do you convey to the American people how long these things will take to get to the bottom line? And as I mentioned to you before, in my experience, it's like 6 months at the earliest before a 50 basis point increase really starts to impact Apple's earnings or something like that. It's going to take a while to get there. 6 to 9 months would not be any, to me, out of the ordinary for these rate increases to start to impact the bottom line. What will happen, though, is remember, at a certain point, rate increases mean cost of capital is going up. So it's going to start to impact companies' bottom lines. And while we saw some great earnings this earnings season, next quarter will probably be okay as well. The quarter after that, we might start to see plateauing or contraction in earnings numbers, and that's when people will really start to freak out. So we'll have to wait out there for that one. Yellen didn't comment today. It was Powell. Powell said the economy is very strong. He actually made a point on unemployment numbers saying unemployment is great and we're seeing the highest wages we've seen in a long time. Yeah, because you still have a lot of lack of labor participation. So you're having to offer more for people to come to take those jobs. Let's see, where were we? How can I stick my plan today? I planned long at 50 basis point, but I didn't because I got scared. The easy way for that, NB, is as a trader of any asset class, and I think it's anything in life, if there's something that you're afraid of, the way to get over your fear is to do it. If you're afraid of swimming, then go into a swimming pool and stand in the shallow end so you're not actually floating, and then lift your feet off the bottom. If you're afraid of trading, don't go out there and trade a full S&P futures contract. Trade a micro. Go down and trade just a small little bit of one and put a couple dollars on the line so you have that emotional attachment to the trade, but just a little bit of capital, right? That's one thing that's great about these micro futures contracts is it doesn't cost a lot. I think what micro is you need $1,200 in margin to trade one. No big deal, or less depending on where you trade through. So if you're fearful, just trade one share. Don't worry about the profits. It's about getting you past that fear piece. And NB, you would have been right today. You would have had a great day. Unfortunately, you let your fear kind of panic you out of it, which it's normal, but you just got to get past that fear. And to get past that fear, you got to do it. You got to get out there and get involved. What else was noteworthy? As I look at this chart here, the S&P, everyone's asking, what does it mean for our markets right now? Well, I don't know exactly where things are going, obviously. If I knew exactly where everything was going, I would just stay home and go all in on every single trade that I make. Instead, I'm chipping away little pieces here because I'm expecting things to happen, and it doesn't always work, and I'll take my losses along the way. Yeah, I think it depends where you trade them on the news. You said micro futures is like a few $100s. Yeah, I think that for me, because it depends where you trade them. $1,200 I think is the margin requirement for TradeStation, and I have a futures account there. I didn't use Ninja today, so it's just orders on my TradeStation futures account. What else? Oh yeah, let's go to look long term. So again, it's about the Fed funds future. So let me show you what happened here for the December, because really it boils down to December, right? What does the year look like? And what I want you to notice is here yesterday, there was a 50% chance that we would be between 3 and 3.25 by December. Notice what happened today. That dropped by a full percentage. It went to 2 and 2.25 is where the probability is at now. So that's a 1% decline. That obviously is much more bullish for the equity markets because the brakes aren't being slammed on. That was a huge turn today with regards to these numbers. So obviously the market's rejoicing in Powell's comments and anticipating a little bit of relief here for the markets. Personally, I think you'll start to see these ones creep up a little bit, but probably not get back up to this 3.25. Well, it really depends on what that inflation number looks like. All right, what else do I got? So that was that. Let me go to a couple questions that pertained to the trading session. So here's your economic calendar for those that were paying attention. It was in line with expectations with regards to the Fed funds rate. With regards to the U.S., you did have some numbers that were mixed. Your final services PMI numbers were better than expected, and the ISM services PMI numbers were worse than expected. So I guess that's a net wash. The part that got me, though, was this ADP non-farm employment change. You can see up here, there were, in the previous month, 479,000 new jobs created. They're expecting it to drop to 382, which would have been a decline of about 90,000. We actually came out at 247, which is a much more significant drop of 230,000 jobs. Further, in my opinion, looking worse for the unemployment data because there's no new job creation. And maybe those jobs have just been filled. We're at max employment, who knows? But that was a pretty big decline there as well, which I think is part of the reason when the market started off, we started to see a little bit of weakness early on in this session. Of course, I think a lot of people are just anticipating what's going on with the damn Fed. Let's see. Here is... I wanted to address this one from Leonard. Leonard, thank you. He says, why such a huge rally today? I think markets should have gone down. Well, this will make me sound like a jerk and condescending, but don't take it this way. The market doesn't care what you think, Leonard. The market doesn't care what Chris or Gallo or Munez or Naum, Lisa, NB, Jeff, Pro, Big Eb, they don't care. Market doesn't give a squat about you or me or anybody else. The market's going to do exactly what it was supposed to do, and all our job as traders or investors is to be reactionary. In many cases, I try to be anticipatory, but you got to just follow what the market gives you. So if you were in a situation where you were betting that this market was going to go down today and all of a sudden it started to rip up, you had to be getting out of that one, Leonard, and move on. I already explained my belief as to why, and I think it has to do with Steve Leisman's question about 75 basis points. As soon as that came off the table and was removed from the discussion by Jerome Powell, that now put into question all of the rate increases for the remainder of the year, and we've already seen expectations for December drop 1 full percentage point. That is extremely good for the equity markets. Now, it doesn't mean we're not going to continue to experience inflation. It doesn't mean we're going to experience smooth sailing for the markets here. It just means that they're not being as aggressive, which translates to fairly optimistic price action for the markets going forward. Hello, Frank. Good to see you. Let's see. This is from Les, who is here today. Good to see you, Les. Looks like the ES, the NQ, the YM, and the RTY closed in tested daily supply zones today. What are your thoughts and interpretations of the markets at this point? Good question. If we look at what happened today, here is the daily on it. And let's just run through our markets here. I'm going to start at the bottom, work our way up. Here's gold. Now, gold, in my opinion, still looks like it's stuck in this ugly downtrend, right? It's lower highs, lower lows, even though today it was up 0.63%. Now, the Russell 2000, 2.45%. It broke those lows a couple days ago, right around 1881, is now just kind of ripped to the upside. But notice, where is the Russell? I don't want to move the yellow box, but I'm gonna. Sorry, Tom, yellow box is getting moved. If we were to break this down a little bit better, you'd say, where's it going to bounce back up to? Somewhere in there. And here we are at that upper supply zone. So if anything, I'm going to wait and see what happens tomorrow because it could very well end up being a good shorting opportunity. I think at this point, there's just mass euphoria and hysteria with regards to the announcements. We're still raising rates, folks. It's just not as much as thought. Here's your Dow Jones Industrial Average. Same thing. Came right back up to these highs it achieved a couple weeks ago. About a week and a half ago. S&P 500 looks the same, right back up to supply at 4,300 where we mapped out yesterday. NASDAQ was the real leader today, comes right back up to these areas that it achieved back on April 26th and 25th. So all of the major indexes are smack dab in supply zones. My personal gut tells me they're going to break all those supply zones. I know you're like, wait a minute, supply and demand is supposed to work. Yes. I think right now the expectation from the market is a lot of people are still bearish and they're going to start to short at these supply zones because that's where it's turned before. My gut tells me you're going to see it pop through this a little bit, go up for a couple days, maybe a week or so, and then start to drift back down. Once it got everybody who was short back long, then it will ultimately sell off. So that to me is what I expect to happen out there, Les. But that's just my opinion. Who knows? I'm not going to hold on to that opinion through hell or high water. If the market gives me opportunities there, I'll be making trades in that direction. But I just feel like it's trying to juke as many people out of the market as possible. So people thinking it's still going to go down, it'll rally up, and then all of a sudden it'll rip back down in a week or so, etc. Okay, let's see. I keep that year-to-date box. Cool, good. Tom's the yellow box fan. Futures might break them overnight too. I think you're right, Christian. I think you're right. I think you're going to probably see those levels break here soon. Let's see. Microfeatures like a few $100. Yes. Earnings are good, but the cost of doing business is killing the margin. Correct. And what you're going to end up, I think what you'll end up having happen is capital is going to start to dry up. Again, the Fed, one of their major things they talked about was the unwinding of their balance sheet. So they're going to start to sell up to $30 billion a month of treasuries and $17.5 billion worth of mortgage-backed securities a month. That's $47.5 billion a month the Fed is unwinding. They're selling that, and they're taking that cash and putting it back to the ledger where they created it all from. They're removing $47.5 billion a month from our money supply, and that's going to happen for 3 months. At the end of those 3 months, those numbers will be doubled. They're going to raise it to $60 billion a month sales of treasuries and $35 billion a month worth of mortgage-backed securities, which means $95 billion a month are being sold to the market. Now, how is that going to impact things? Well, look at what happened with the 10-year today. We'll talk about volatility. Here's your 10-year. You would think there'd be a lot more volatility on this one, right? Because it was less than expected. Well, it really wasn't much volatility on our 10-year. However, as the Fed is going to have to unwind a lot of this paper, and they're not really necessarily heavy in the 10 years, so it's kind of an unfair example, what you will see is the price of the bonds drop, and these yields continue to rally because they have to entice buyers to buy them. And because, let's just go look at the ZN. Here you go. Here's your 10-year futures. Why is the price tanking so much? In anticipation that the Fed's going to be unloading a dump load of treasuries. I mean, if I remember correctly, they own over $8 trillion worth of bonds that they've accumulated over the past few years. Now they're just going to try to unload them. So to me, I see this as a trend that's going to continue, right? It'll probably keep on dropping here on this 10-year note futures, which in turn means the inverse of that for the yield, which means that these 10-year bonds are going to keep rallying to the upside, which at some point, probably next year, I think will really become a much bigger issue for our markets going forward. Naum says, if you're afraid of skiing, don't start off on a double black diamond. True. Start off in the bunny slopes, although I think the bunny slopes are no fun either. Part of skiing or snowboarding is really getting momentum and moving. You don't get that on a bunny slope. What happened with the dollar today? Let's go check out that Dixie. Here is your dollar index. Giving back a little. You're giving back a little bit because the amount of increase, when you have the dollar rising like it was, and the anticipation is that you're going to have 50 basis point increase this month, 75 basis point increase next month. That means that the carry trade, the carry trade is basically when you hold U.S. dollars and you collect interest on the dollars and you sell another piece. So you'd buy like the USD JPY, right? If you bought the USD JPY, you'd collect your 1% for holding the dollar, and you'd also collect the negative 0.1 that the Japanese dollar. You're selling that. So you ultimately are making 1.1% gain just by holding U.S. dollars. That changed today because the expectations are that in the future, the rates won't be as high and that carry trade won't be as good. So this is, in my opinion, money moving out of something, moving out of the dollar and finding another safe haven to run to where they can get a greater yield. That's why. Merlin, do you think this will keep the housing bubble from bursting again? No, I don't. I think that the housing bubble is just a ticking time bomb. I think that it's just been completely inflated by that 10-year, by the Fed, and by the Fed buying mortgage-backed securities. And now you have, people overbidding on houses, et cetera. I don't think it's going to be an implosion like we saw back in 2007 and 2008. I don't think it's that level. But do I think that the housing market could drop 30%? Yeah, easily. Let's go look at something like IYR. And I'll go here on a monthly for IYR, which is real estate. All right, you go back into what happened here. Look at the similar picture. Look at this huge rally up from 2003 to 2007. Right, that was fueled by big influx of capital into the markets and real cheap rates. And then all of a sudden it came crashing back down as rates had to rise back up. Well, you see a similar picture here. Of course, this is all done because of the COVID pandemic. We have that huge move up in real estate, but could it drop significantly? Sure. Just to give you an idea of how much this one dropped, the IYR, which is a real estate ETF, dropped to the tune of about 77% in 26 months. So in 2 years, that thing dropped 76%. this is going to be a slow break, but at some point this will come back down, and I don't think you'll see 76% drop in it, but do you see 30, 40%? I think so. I think it'll start to drift lower and lower and lower. But again, you got to wait for it to confirm it, because right now this looks like choppy mess at the top. There isn't any real clear trend with regards to downside moves. Let's see, Indigo. Ask a good question. He says, with the upcoming stock splits of big companies, is it better to buy before or after the split? My personal recommendation, don't ever buy after a split. Normally, every time, but this is my personal experience, when I see a split, it usually rallies all the way through the split day. And then the day that it splits, that's when everyone tries to unload their shares. Now, we do have an outlier with regards to that. If you look at something like Amazon, right? Amazon's made it known their announcement, and all of a sudden we've seen pretty significant selling. This initial green part right here to the right of this blue line is where they made the announcement on this blue line. It rallied up. Now, we saw a similar picture with Tesla, where Tesla just kept on rallying all the way pretty much until the execution date or the split date. Well, not seeing that with Amazon, but you've also seen that with, let's go, here's Apple. And why is Apple not showing that one? So this was their split date. So you can see this vertical line here on Apple back to 2020. This is the actual split date. Notice 2 days after Apple split, did nothing but sell off, right? But it rallied, and I believe right here. So they announced on July 30th that they're going to do a split. It ended up vaulting up from a price of $96 all the way up to about $133 on the day of the split. You look at Tesla. Let's go back to their split. There's the split date. The announcement happened right here, which was on the 11th of August, I believe. And the split date happened on the, looks like the 31st of August. And it went from a price of $272 all the way up to a high of $502. So 50% or 100% gain. So I would definitely not buy after the split date. Buy up to it. Now, the only one I've seen that's been really odd like that has been Amazon. Let me see what happened with Google. I don't remember when Google's last split was, but here's your split date. Google's going to do a 20-to-1 split on the 18th of July, and that's also selling off. What did they do the last time? Let's see if there's one on here. It's been so long I can't remember when Google had their last. Here's your last split date. Yeah, last split date was in 2015. You can see for the week leading up to it, right, you had a pretty nice rally up, but I would never buy anything after the announcement. It's generally where everyone starts to unload their shares and get out of these positions. Let's see. So after today, you think a lot of traders will start to feel comfortable going long in the markets again, not thinking about the effect. I do, Lisa. I do. Because right now, if you watch the major news, and I don't watch this, so you guys will have to play my proxy. I refuse to watch Fox or CNBC or Bloomberg. I don't watch any news whatsoever. I just don't believe it. I think that they're all going to try to manipulate me, and I just like to look at the price charts. I will go and pick the headlines I want and read through articles I find interesting, but I just don't watch the news. I'm willing to bet, and you guys let me know tomorrow how it goes, but I'm willing to bet you that if you watch the news stations tonight, it's a sense of jubilation, right? It's like, oh, the Fed, it's off the table. They're not going to raise 75 basis points. The market's really liking this. It's looking good, folks. This is great for our markets. And I think that type of talk track and rhetoric causes the retail investor to just become sheeple, right? They're just like, blah, blah, and they just start buying because, oh, this is great for the markets. The truth is, we still are climbing a mountain of worry right now. It's not a wall. It's a mountain of worry with bonds. You could even throw cryptocurrencies in there. You have real estate markets. You got the equity markets. You have the whole Fed going on and just global issues altogether. There's a lot of problems going forward. Does it mean catastrophe for our markets? Not at all. Absolutely not. We will survive it no matter what we always do. But do we see a big drop coming? I think it starts to become more of a higher probability, as I've mentioned on this program for quite some time. Let's see. Tom says the housing bubble is nothing like 2006. Yep, when loans are garbage, no income. I totally agree with you, and I'm not debating that at all. The only parallel that I think is going to start to line up with the 2006 is near the end of that housing bubble in 2006 and 2007, when it started to fall apart, is they all of a sudden started to crack down on loans and make sure that everybody could qualify and make their payments, right? That was at the tail end. Otherwise, it was, can you fog a mirror? Do you work? You don't even have to tell me where. Just, do you work? Okay, you do? Great. You got a loan. Now I think because of what happened in 2006-07, they're being much more vigilant about who qualifies for loans. But remember, if you have a $500,000 loan at 3%, and then all of a sudden you pre-qualified at 3%, and you wait a year to get this loan, it's now 6%, you may not be able to make those payments, and your bank's going to go, you don't qualify for that loan anymore. So to me, that is that's the big challenge. I think at a certain point, it's going to start to choke out a lot of people from the housing market. Will the bulls be out in force tomorrow? I'm thinking the market could have a bear trap in the morning. I don't know. No, I don't know. My gut tells me you're going to see a pop tomorrow. Just follow through, because now this announcement has some time to digest with the traders and investors and the retail people. You know, you're going to have Jim Cramer out there tonight saying this is the greatest thing, and Jerome Powell's doing a great job, and they've got things under control, and let's paint that rosy picture so y'all go out there and buy a bunch of stuff. I feel like that's what is going to be said tonight. So personally, my expectation is it's going to move up tomorrow for a little bit, but don't trade that. Don't trade what I think. Trade what the charts tell you. I mean, that's the only thing you should be trading. You shouldn't trade what I tell you or Brandon Wendell tells you or anybody. You got to make your own decisions, right? Ultimately, it's your money. I'm not trading your money, nor will I ever trade your money. So for those of you who get emails from me, some con artist saying that he's Merlin and going to trade your money, I will never trade your money. It's not going to happen, ever. You could be like, Merlin, I'll give you 90% of the gains that you make on my portfolio. I'd still go, thank you very much. I have no interest. I'd rather remain friends. Has anybody in here actually traded other people's money? Anybody in the group? The problem is, everything's great when you do well. And anyone here who trades actively knows you go through losing streaks, right? You go through periods where you're down a little bit or maybe even a lot. When you're trading someone else's money and you're down a lot, that person is calling you all the time. They're freaking out. I don't want anything to do with that. Done. Boom. Moving on. So there we go. Good, Lisa. I don't have TV, so I can't watch the news. You're much better. Tom, watching financial television is like panning for gold. You know it's mostly sand and dirt, but that's a great analogy. I like that one, Tom. And you're right. There are some good people, some good analysts, and some good information, but the more I do this, the more jaded I become. And again, if you don't believe us, just simply go to YouTube and type in Jim Cramer manipulation and watch that video in its entirety. If you have any questions, ask them here and I will watch the video and clarify it for you. But essentially, it gives you a peek behind the curtain of how financial markets really work. It's lying, it's cheating, it's manipulation, and in many cases, it's flat out stealing from people. So you got to be careful out there with regards to trading in these markets. Whenever he's fat and happy and puts are cheap, yep. And I'll be waiting for that, Lisa. I'm hoping that we get a nice little rally here over the next couple of days so I can build some deep out of the money. All right. Deep out of the money puts. Buy some deep out of the money puts. All right, I'm going to keep moving on because I got a bunch of things I got to get to today. But Thomas, you said this question, and I got to do damage control here. Thomas says, I bought some lift in September expecting it to go up. Today had big gap down. What would you do? I'm down a lot. Yeah, I looked at that chart. I don't usually follow lift, but holy cow, man. I got to ask you, and if you're here, Thomas, this was left on my TraderMerlin, so maybe he's not watching live. But if you are, Thomas, you should interact with me here. My question for you, if you told me you bought in September, and I'll map out what the month of September was. Here is the beginning of September, and here is the end of September of 2021. I have to ask you, what was it that drew you in? So this is the high for September, and that's the low for September right there. That yellow box is all of September. So what that tells me is you bought lift somewhere between $57 and $47. I got to ask you, why? Everybody, if you look at this price pattern right here, look at that picture right there on that chart, okay? Forget what happens. I know you guys saw what happened after this, but I'm hoping everybody that looks at this can tell me what price is telling you. Who cares what any analyst says? What is price telling you on this chart right here of lift? Let me know. Is it getting stronger? Is it getting weaker? It's literally telling you a story of what's going on with the buyers and sellers. You've seen me analyze these charts hundreds of times in this show. It's clearly getting weaker. It's irrefutable. How is it irrefutable? Well, if you look at what's going on here, you have this series of lower highs. So if this thing was in fact very strong, what would be going on? It'd be making new highs. I mean, this thing looked pretty bad. So if you bought it right here, you know, you got to have a stop loss at some point. Yeah, right? Everybody's saying downtrend, downtrend. He bought the dip in the downtrend. Okay, I'm hoping that he ended up buying somewhere near 47, and that I could understand, right, GD? If he did buy it down here at this demand zone at 47, great. But you have to have an out. And if you look even deeper, let's just go, like right here is the double tap. You can see it hit this low right around 43.60 back in January of 2021, and then it hit it again, almost hit it again, back in August. So that's your stop loss. That's your stop loss, Thomas. You have to have an out. And I know you think Lyft's a great company or Uber's a great company, whatever. Doesn't matter. Your opinion of a company means bupkis, squat. And then all of a sudden Lyft does this. You're out. You should have been out at 33.50. Done. Over. Move on. And unfortunately, you're in a situation now, which I feel for you, man. Now you're in a situation where it's almost too late to get out. It's trading at $21. You had a 30% down day today, man. 30%, and it's on earnings. Even at this point here, if you're even a newer trader, that is the trend, man. It's nothing but lower highs and lower lows and lower highs and lower lows. So what would I do here, Thomas? I don't know, man. You're down probably over 50% on this trade. I mean, this is a catastrophic loss in my opinion. This is the one that gets really, really bad. Your only saving grace right now, I'd say it, is you're at this low that goes back to 2020. The low price you see here on October 28th was right around $21.34, and here you are at $21.50. That's your only saving grace on this, even if I go back to, let's say, a weekly. This is really ugly. I guess you got to ask yourself how long you want to hold this thing for. Is Lyft going to go away? Probably not. Could Lyft go down a lot further? Yeah, it absolutely could. You're already down from $68 to $21. This is a bloodbath. This looks really darn ugly. Break off the engagement. Yeah, I know, Doug, but see, the challenge that he's going to have, and a lot of you probably may at some point have been in the situation, is it's already down 60%. Now what? I love that Noam. He said, Noam says he's on a slope of hope without a stop loss. Yeah, agreed. And this is why stop losses are so important. Jim Cramer tells you should never use a stop loss. You know why? Because a lot of his picks just keep on going down, so he doesn't want to feel stupid for getting you out. Thomas, I can't tell you what to do. I'm not a financial advisor, and I don't ever want to be a financial advisor. I would just know what I would do in this situation. I would sell it. I would actually go a little bit lower. I would let it go below this area of demand that's back here in 2020. Oops, let me get you the chart. I'd let it get, if it got a little bit below that, which it really already has, I'd just dump it. And you know what will happen? The second you dump it, it's going to end up rallying back up. Bottom line is you should never have held it this long. Should never have held it this long. That's just way too big of a down move. It's the same thing when you look at charts like, right? I know a couple people who are still holding on to Rivian like it's the greatest thing in the world. It's like, well, if you bought it at 100, then set a stop loss at 90. Set a stop loss at 85, but now it's down at $33. Or you look at Lucid. Oh, Lucid's so great. Lords, it's going to be amazing. Well, if you bought it at 40, your stop loss needs to be somewhere up in this 35 range. You wouldn't be holding it at 20. Or what was that one? A guy who asked about it the other day. VLDR. I mean, you heard so much great stuff about Velodyne. Everyone's like, oh, Velodyne. You got to get some Velodyne. It's like, okay, well, at what point do I get out? Right? This is the stuff that sets you up. Oh yeah, best webcams. Thanks for playing, buddy. Let's see, how do I hide you? There you are. Bye, best webcams. See ya. Wow, that guy just spammed like 30 times in here. I'm hoping you guys don't see his messages anymore. It's not a troll, he's just a spammer. Yeah, I agree with Doug. Doug says, bite that bullet, take the loss, and move on. We've all had to do that. That's why you use a stop loss. So here's what I would suggest, Thomas. End the misery. You've been in misery in this trade since September, right? You have probably a week or two where you're like, yeah, this is great. It's doing what I thought. And all of a sudden it's been just bump, 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 just dropping down and down and down and down. Everybody's gone through that at some point. And the thing that you're telling yourself right now, which is incorrect, is it can't go any lower. It's got to go back up. This is Lyft. I know it's going to go up. No, it doesn't have to. I mean, in theory, this could go all the way to zero. It could go bankrupt. We don't know the fundamentals in depth. It could go all the way to zero. I don't believe that would happen, but when you are in the situation pull that Band-Aid off as quick as possible, and then I would take a piece of paper, grab yourself a nice sheet of paper, and write down all the things that brought you into that trade. What was it that made you buy in September on lift, right? There obviously was something, whether someone influenced you or you just looked at the supply and demand zones, that's fine, but write down the reasons you got in, write down where your stop loss was. Clearly you didn't have one. Write down where you would have put it, and what you are paying the price for now. Like this now is an education. This is a very expensive lesson that you're facing, Thomas. I'm just going to say, let's say you had 1,000 shares. Well, that means that you're down roughly $26,000 on this trade, right? That's an expensive school right there. One lesson. So if you bought it, get out and then learn from it. Make this a lesson. Make this your degree. Lift doesn't mean lifting up. Oh, but I'm dumb. Way to go, Lisa. Boy, speaking of comedians getting attacked, did anybody see the Dave Chappelle thing at the Hollywood Bowl where he got attacked by that guy on stage during his show? Was that a plant or what? That just seemed really, really weird to me. All right, so there you go. Let me see. I think I had one more question over here. Nope, that was it for my questions. Man, this is good. All right, so I forgot what the code was. I think it's OTA 50. Let me just go OTA 50. So I'm going to type this into chat right there. That is the code. As you guys know, I actually did a dry run today of my presentation. It's been so long since I've been on stage up in like one of these money shows or Vegas or anything like that. So I didn't quite, I don't know. I just wanted to make sure I rehearsed. But if you go to the money show, I will be there in Las Vegas next week. I'll be there Tuesday night. Going into Wednesday is my presentation. I'll be presenting Wednesday afternoon. 3 easy ways to supercharge your portfolio with digital assets. And again, I'm trying to frame this around, I guess, belief structures. When I say belief structures, we all live in our bubble, in our own little worlds of information and how we perceive and decipher information. And if you look back historically, there's been some major historical innovations in society that at the time when they came out, people were like, oh, this is stupid. It's never going to work. It's not going to fly. It's not going to be anything. And then 10, 15, 20 years later, it is absolutely the way to do things, right? It's revolutionized. You can look at internet or semiconductors or credit cards. I mean, all these things changed perspectives of how we do business, and now they're commonplace. So I'm framing it like that, and I think when we look at cryptocurrencies and digital assets and stable coins and yield farming and lending protocols, it's now just one new element for our portfolios. And how can I empirically, not with my opinion, but look at the actual data sets that data has been returned on these cryptocurrencies, the yields that companies are offering, etc., and map out what a portfolio might look like, making slight augmentations to it using digital assets. That's the plan for that presentation in Vegas. Of course, I'm always happy to go have a drink afterwards or before. Actually, it had to be after. I definitely don't want to go have a drink before. It was funny. A friend of mine was like, "So you're gonna go get wasted in Vegas?" I'm like, "No, I'm gonna be probably sober as a bee playing blackjack for a little while on Tuesday, but Wednesday, Wednesday's the presentation. Should be a good one." Too bad I'm in Atlanta on business that week. No problem, Lisa. I have a feeling, I want to see how this goes and how it's perceived, because I spend a lot of time looking just of pure statistics, right? My approach to trading is much more probability and statistics. That's how I try to approach things. So I'm approaching this that way as well, saying, hey, here's the historical returns on all these different asset classes. Let's compile them and see how all this pans out. Yeah, Will Smith's son. It was pretty funny. I don't know if you guys saw it, but Dave Chappelle got attacked at the Hollywood Bowl. Some guy jumped on stage, tackled him. I guess he had a plastic gun that had a knife inside of it, and they beat the hell out of this kid, took him away. Dave Chappelle went on to do the show, but Chris Rock came on. It was really great. Chris Rock grabs the mic from Dave Chappelle as he's giving a hug. He goes, "Was that Will Smith?" Probably the best line of the night. Let's see. Did you see the earning report on MicroStrategy and read how they had to report a loss on Bitcoin even though they were $1 billion? I did not see that. Nope. I did not see that one on MicroStrategy. You know what, Big Ab? Here's why I don't like craps. First off, craps, you got to stand there. I got to stand there and lean on a railing, and I got to touch these dice, throw these dice, and I don't know. It just seems too much of a probability of a chance, right? You've got 2 dice. You got a 1 in 36 chance of getting the roll that you want. Of course, we could calculate out the odds of a 7, a 6, a 5, 4, etc. I like blackjack. Blackjack to me is a very simple probability game. You have 4 cards of each suit. So there's 13 cards total of each suit. So I know exactly what my probability is. If I need to hit on a 14, I need 7 out of 13 cards. Therefore, I have an over 50% chance of making it. And it's just simple probability. When you start to play all the numbers in craps, it's much more complex. But yes, you could probably do better long-term playing craps. But my brain is wired to blackjack. I've been playing that since I was a little kid, and I'm damn good at it, I like to say. Knock on wood. Did you say yesterday that historically crypto may be in a slump for about 2 years? No. I didn't say that, Lori. So what I said was there's a 4-year cycle of cryptocurrencies that has been, granted, it hasn't been around that long, but there's been multiple 4-year cycles that has this very unique pattern. Now, at the beginning of that 4-year cycle, it looks like there's like 6 months to a year of down, and that's what we're in the midst of. And then it flattens out and starts to curve back up, and the last 18 months of it are just ballistic straight up. Now, we've been down for a few months. So that tells me that maybe we have 6 months left of this to sell off. I think maximum be like another 6 months of the sell off in cryptocurrencies. But that's really what I'm looking at. And I'm still holding. I'm actually getting a little bit more cash set up, so I'll buy a bit deeper if it does continue to drop. But you look what happened to cryptos today. Look at the overall indexes, right? So you had the indexes were up 3%. Bitcoin was up 6% today, and it looks like nothing. So, there is still, in my opinion, a tremendous upside potential for Bitcoin, but I think that's going to come with more adoption. I think that's going to come with some regulation, and we just don't have that yet. When is the next halving? I want to say the halving is going to be in 2024. Not off the top of my head, I don't know, Tom. I don't know off the top of my head. Exactly, Big Eb, and I respect that you say that because, as a trader, if you're making money doing something and it's working, why change? At a minimum, you want to try to refine your strategy and make it better. But, there's some people I know that, I thought it was 2024 because we had the last one in 2020, so it makes sense every 4 years. Are you going to have Bob Dunn join you again now that he's on his own? Maybe. The sad part is there's a couple of people who were regulars on the program, which I will not be having back on this program recently because of some decisions they made. So I'm whittling it down. And by the way, some of you guys asked me to have Steven Van Meter back on the program. I reached out to him, and he said no, doesn't want to come back on. So there you go. I tried at least to get Steven Van Meter on the program, but I've got Bill Addis on tomorrow, which in my opinion is even better. Steven Van Meter definitely has an ego out there. He's very, look at me, I'm so great. I think I think Bill Addis is probably one of the more humble people in the bond markets and probably one of the most well-versed. Lori, a halving is when the mining rewards get cut in half. So every 4 years, it's 210,000 blocks. So as you guys know, or may not know, a Bitcoin block is minted every 10 minutes. So every hour, we get 6 blocks created. After every 210,000 blocks that are created, the reward for miners gets cut in half. So from 2009 to 2013, it was 50 Bitcoin per block solved. From 2013 to 2017, it was 25. From 2017 to 2021, it was 12 and a half. From 2021 to 2024, it's 6.25. And then it'll drop to 3 and an eighth, and then so on and so on. But it's just they keep dropping and dropping. GD, I reached out to Michelle as well. Not what a jerk he is. He's busy. He's got a ton of stuff, and I get it. I'm a nobody. I mean, honestly, if you look at the grand scheme of things for financial markets, what am I going to do to Steven Van Meter's channel? Nothing at all. So he doesn't care. I agree with you, Ryan. I think Bill Addis is absolutely top shelf. He's awesome. I'll get Ryan Watkins on. Steven Van Meter, Tomasina. We had him on exactly a year ago. He's very prolific. He calls himself the Bond King. I actually really enjoyed having a conversation with him. I think he has a lot of different perspectives on the bond markets. Actually, some of the stuff he talked about last time I had him on the show, or the only time I had him on the show, I didn't agree with. But no, Eric Kochotnicki would not be on the program. There's certain people that just don't treat people with respect. Eric Kochotnicki is that person. I've worked with him for a long time, and his blatant disrespect for people and the way he treats human beings, I don't want anything to do with that guy. Sorry. And I apologize because he actually has probably some good things he could share with us, but You know, I just don't like to give people the time of day if they disrespect people. You know, if you're going to treat people like shit, then I'm not going to have you on the program. Period. I agree with Big Ab. We should maybe try to get a name. Oh, you thought you're coming back here? Another one, webcams, adult dating sites. See ya. Man, he's back quick. He only got 2 of them in this time. Last time he got like 15 of them in. Exactly, Lori. We are all humans. We all have our flaws. I've got tons of flaws. But I'm still going to treat most people with respect until you do something to harm me or the people that I care about. And, of course, that goes back to the trader out in Chicago. Dirtbag, scumbag, liar, cheat, thief. You know, no love in my book for that guy whatsoever. May a train hit him in the backside as he's crossing the street. You get what's coming to you. Karma, my friend. Karma. All right, let's go into what's happening out there for tomorrow. Here is your earnings counter for tomorrow. Square. I'm actually pretty interested to see what's going on with this one. So I still call it Square. They changed their company name to Block, and they're reporting earnings after market close tomorrow. You got Illumina, Dominion Energy, Shopify, which is Shopify has been a really interesting one recently with regards to price chart. Let me bring that chart up for you. You can see that one. It's been a bloodbath as well. I mean, this thing was up almost $1,800 and now it's down at $480. Ooh, brutal. You know, we drew this little demand zone down here. It had to bounce for like 3 days and then broke down below that. So ugly, ugly stuff for Shopify, but still a good business model. I mean, it's just helping people get businesses started. So I'm very curious to see what their earnings numbers come out to be tomorrow. You've also got NIO, which is an EV company. Of course, that's out of China, so who knows if that earnings is actually going to be coming out or not. Then you also have ConocoPhillips, Crocs, and Northern Oil and Gas. There you go. We're reporting earnings tomorrow. Let me just real quickly bring up Square, since I'm sure some of you probably want to check that one out. It's also just been getting beat up. I think we put this line here last time on their earnings, expecting this to be the piece that holds, and it did. It actually had a nice rally up from $83 up to over $140, but now it's kind of drifting back down. Hey, Tom, I'm not driving the train. I just think that karma is one of those pieces that will come back and bite you in the butt, and that individual has so much karma that should come his way. It should just flatten him. I hope it happens. Anyway. All right, I think that's going to do it for me. I've done earnings. Let's do economic calendar, then we'll wrap up here for today and get ready for our Thursday session. All day tomorrow, you've got OPEC meetings, which are, you know, obviously we've seen some big moves in crude oil. It's up 5% today. It's still, in my mind, just traversing sideways on the daily time frame here. Let me bring up that. Here's your daily of crude oil. You know, you're still really just traversing sideways in a fairly compressed range to get some of those lines on there. Right now, you're at an inflection point, in my opinion, right around 108, where it almost looks like it's forming a cup and a handle pattern here. So we'll have to wait and see what the OPEC meetings bring to crude oil tomorrow. But you also have for the Bank of England, you can see there at 4 a.m., I believe that this is, I can tell you real quick. Yeah, this is Pacific time. So at 4 a.m. Pacific time, the British pound will be making an announcement with regards to their rates, and they're expected to jump 25 basis points from 75 up to 1. And the British pound has also been on a pretty ugly slide. Here you go with your British pound against the U.S. dollar. It has not been pretty. On that note, I should probably get David Warner on to talk about his optimism on the British pound. Other than that, you don't have too much else going on for other parts of the world. A couple minor things coming out for Japan. But that, my friends, is your economic calendar for May 6th, 2022. All right, everybody, let me see real quick how much time I got. Big Eb, you're not getting me over an hour. Let's see. What else do I have here? I heard you may be joining me and Lori. Maybe. Well, maybe. I don't think I have enough to bring to the table for you guys, Lisa. I am a very basic options guy. I do not do any complex strategies. The most complex thing I do is a monthly strategy where I sell options and I'm collecting 1 to 3% a month. That's it. I'll buy directionally based off supply and demand, but I'm pretty basic. I don't think I'd be entertaining for your group, but I'm happy to do it. Warner's weird lately. Warner's always weird. He's in New York. I mean, you know, you're out there in the high rise, you're going to go crazy. Believable direction. I haven't talked to Josip in a long time. Yeah, I'll see him. Josip was brilliant mind. He was one like this mathematician guy that was just awesome. Hedging when you buy puts. Okay, I'm going to do that. Merlin, unit price action, hedging. I got the L&L. The L&L freight train's getting me right now to come into their mastermind session. Well, okay. We'll do it at some point here in the near future. Let me get past this expo thing, and then we'll see what happens. But sure, I'm okay with it. Yes, 56 does round up. All right, that's going to do it for me, everybody. Again, if you have comments, questions, feedback, you can put your comments down below the YouTube video. That helps me the most. If you're new, hit that subscribe button. I think we've got some new people here. Share it if you got it. Let people know about the show. And also, if you have personal stuff, you can send it to TraderMerlin@gmail.com, which is on your screen. Until then, happy trading, everybody. I will see you tomorrow. Take care.